Hello, everyone. Finally, I'm seeing all of you face to face. Yesterday, I could see some of you virtually on the screen. Now, after the presentation, I drive down to Incheon Airport, catch a flight, come down here to see you. So I'm that dedicated for this meeting, for this workshop. And thank you for a warm introduction of myself. So I don't think I have to introduce myself again. So I'm going to move on. And if you were attending our workshop yesterday, I will cover about IPSASB, how the IPSASB is constructed, and what is their role, things like that. So I think I can save a little bit of time by bypassing some of this slide, if you don't mind. But one thing I want to revisit or reemphasize is we all here are people handling informations, probably fiscal issues and fiscal-related information. But information itself, by itself, or numbers by itself, doesn't have much of meaning unless those numbers, those information, actually interpreted under specific context. And one of the best way to get the context is by comparison. How other similar countries are generating information. So let's compare these two numbers. Or how previous years we reported numbers. So let's compare with own numbers based on time dimensions. So that kind of comparison is the way to generate more meaningful information. That's why we come up with a standard, global standard, and consistent standard, and comprehensive standard to come up with good, rich body of information to make better decision for your fiscal management. And today, I'm supposed to talk about sustainability, but fiscal sustainability, long-term implication of public finance. And especially, I'm supposed to talk about RPG 1, Recommended Practice Guidance 1 of the IPSASB. So about the RPG itself, I briefly introduced yesterday about its character. It is not the standard. It is actually recommendation, showcasing the best practice of conducting information processing and sharing within the government and also with the constituent of your own countries and abroad. Come back to the main theme for this session. RPG1 is about reporting on the long-term sustainability of an entity finance. When you take a look at the RPG1, I believe supplementary material already shared with all of you here. So I hope some of you, hopefully, ideally, all of you had a chance to take a look at RPG1. It's not that long. It's simple, straightforward, because it is about guideline. But RPG1 is something unique from IPSAS accounting standard point of view, because it talks about forward-looking information. What will happen in the future cannot be directly measured, cannot be precisely articulated, but things will happen in the future. That information should be shared with constituent. So this is most unique aspect compared to other standard. So RPG1 is about forward-looking information about on whether existing policies of the government, if those policies last on and on and on in coming years, how fiscally sustainable over the long term. Lawmakers sometimes come up with an idea of providing really beautiful benefit package to each citizens. It's good to provide more benefit to for the citizens, but if that kind gesture of providing additional benefit will ruin the fiscal future, then it is not sustainable. It is not. It doesn't have a long-term positive impact for better governance of the system. That's why we are focusing on what will happen if we keep our promise on word. So this is all about that. And this long-term fiscal analysis report can sit in general proposed financial report, but not in the financial statement. This is intended in this way, because when you take a look at the history of this RPG1, It goes all the way back to early 2000, 2002, 2004. Back then, there was an issue, there was a debate, discussion and debate about how to handle the social benefits. Think about pension. Many countries have national pension system, and that pension means government will pay out to the citizens in the future when they retire. So probable future payout or sacrifice of economic resource. So sounds like a liability. So should we recognize a liability in government financial statement? Over the long, several decades, actually 20 plus years, discussion, debate continued, and decided not to recognize all those social benefits, but some of it will be recognized in the financial statement. So we have IPSAS, specific IPSAS for social benefit, but some of aspect related to social benefit cannot be recognized, but still important information. For example, if countries have specific rule, eligibility rule for the national pension, people meet their eligibility rule, expected payout can be recognized as liability, so that's allowed in IPSAS. But based on demographics, we know the government have to provide those benefits to all the citizens. But it is uncertain whether those citizens can meet the eligibility requirement, how many of them will survive, duration of the payout. So because of those uncertainty, accounting standard itself doesn't allow actual recognition of those liability in the financial statement. That's why this RPG1 comes into the picture. Those information is really important to communicate with citizens, but cannot be recognized as liability or asset in financial statement. So prepare separate report to share that information, forward-looking information with citizens. That's why this RPG1 is actually promulgated and shared with all the constituents, throughout all the jurisdictions. So intentionally, it supplements accounting standard, ultimately to provide meaningful fiscal information to the citizens. Because of that, it supports accountability and also help, even for lawmakers and other decision makers, to make more informed policy decisions, fiscal policy decisions, especially where the pension, health, social benefits, and those sustainability programs are really material from each government point of view. So that's objective and main role of this RPG1. Scope. Initially and normally, these RPG1 long-term fiscal sustainability is assessed from central or whole of government kind of point of view. We'll take a look at example case of UK, but the UK also issue long-term fiscal sustainability report, but for their whole of government account point of view. But some governments have issued this fiscal sustainability report only for central government. It is possible because it is mainly designed for a government unit have fiscal responsibility for macroeconomic stability and growth kind of things. So mainly initially targeted for central government or whole of government, but other sectors, other units with major significant long-term fiscal impact. Sometimes local government can carry some of this social benefit payout for citizens. If that is the case, local government can also come with this long-term fiscal sustainability report also. And this report covers all of material revenue and expenditure flows and key stocks. Stocks means like debt or a net asset, kind of things like that. But one thing I want to highlight here is when I say material revenue and expenditure, we're talking about cash flow because we are talking about forward-looking information. And accrual-based forward-looking information for a year or two makes sense, but for 10, 20, 30, 40 years doesn't make sense because estimate cannot go that long horizon. So we use cash flow projection for this long-term fiscal analysis. And again, this is a recommended practice guideline, non-authoritative. But as I emphasized yesterday, IPSASB is supporting this RPG because they believe that this is really a good practice, compiled from many actual cases from countries with experience. So it's worthwhile to all of you take a look. So what's included? Core content. So again, this is not about analysis itself, but this is about how to report this long-term fiscal sustainability analysis to the citizens. So core elements should be disclosed. Number one, horizon. What is that long-term we are talking about? Some government have 30 years as long-term projection. In case of Korea, the Korean government started issuing this long-term fiscal sustainability report from 2015 in every 5 years. So 2015 was first one, 2020 was second one, and recently they issued a third long-term fiscal sustainability report. In case of Korea, 40 years is long-term. Other countries have 50 years. So it varies, but so explain what is that time horizon we are talking about. And what is required is think about the baseline projection. Assuming existing policy framework, all the policies are staying, what will happen in the country's fiscal picture? Based on the baseline projection, assuming current policy stays, can be added with different kind of scenarios. What if interest rates change? What if energy price hikes? Things like that. So based on that, countries can build up the coming scenarios of future fiscal pictures. So explain about the horizon scenarios, and also make a projection of the cash flow revenue, expense, and about the debt evolution or debt path, and emphasize key policy programs dealing with large fiscal commitment. And key summary indicators also should be presented. For example, debt to GDP is one of the key indicators, allowing cross-country comparison as well, and primary balance and funding gap, things like that. We'll take a look at example case shortly. But anyway, projection indicators should be disclosed as well. But importantly, we're talking about long-term projection, so try to prevent gaming with these assumptions of what will happen in the future. Disclose what assumption you are using to make that projection. So assumption should be disclosed. What projection method were applied? What was the discount rate used? Because based on changing discount rate, over the 20, 30, 40, 50 years, we can change a lot of fiscal projection based on that discount rate manipulation. So explain it, disclose it. And also, this, a key assumption need to disclose is about economic assumption, about how the macroeconomic economy will be changed. And demography should be based on the future projection. And also, policy assumption means what kind of existing policy were considered in making that projection. Explain those. And then another key element of this RPG1 is this is not economists' play game. This is the material to be communicated with citizens. So after conducting this analysis, provide narratives, explain in plain language. So what does it mean? To let people understand. If governments stick with current policy programs, what will happen in 10, 20, 30, 40 years in their fiscal pictures? So provide a plain language narrative, and also discuss about risk and uncertainty and sensitivities. So sensitivity test or stress test can be added based on this. These are the elements recommended to be disclosed in the long-term fiscal sustainability report of the government. Then where this is coming from, and as I briefly mentioned, one of the reasons why the RPG1 came to play is because of the limitation of financial statement. Again, in early 2002, even though more than 2 decades ago, this issue of recognizing this big government program providing social benefit, even though that was started to be discussed, but because of the requirement to maintain accounting system, Some of information can be captured with financial statement, but people realize that financial statements are not enough to carry all of those relevant information for citizens. When you take a look at that figure, past cash flow, cash inflow, and cash outflow becomes asset, liability, recognized in financial statement. No problem. Existing accounting standard can handle it. And by issuing financial statement, those information can be communicated with citizens. But when you take a look at the right-hand side of this figure, present economic benefit realized in the future, as long as it can be measured with certainty, can be realized. So future economic benefit becomes an asset. But some of expected resource can be realized in the future, but with lots of uncertainties, may be excluded from the recognition as an asset. For example, government will tax their citizens this year, next year, in coming years. So in the future, government will collect tax revenue. So can we recognize it as an asset? We don't know how much will be collected. So that's why accounting standard doesn't allow recognition of future tax revenue as an asset. That comes out of the picture. Same thing for a pension payout. Even though government promised to help their citizens by providing social protection net, including pension, but don't know how much of the cash outflow will be involved in the coming years. So based on accounting standard comes out of the picture in financial statement. But those can be even more important to some of our citizens. So how to provide that information to citizens and for decision makers, that's where this whole discussion actually initiated. And this is the example I was talking about. So how we can communicate about long-term fiscal sustainability with citizens. Oftentimes, this long-term fiscal sustainability report include many of these kind of figures, graphs, because the visual presentation is one of the most efficient way of communicating very complicated and complex information. So this is the graph taken out of UK's OBR, Office of Budget Responsibility, Fiscal Risk and Sustainability Report, issued on July 2022, a couple years old. But I picked up this because this is an interesting figure. So even though UK OBR doesn't claim that they put together this fiscal risk and sustainability report following RPG1, they don't explicitly claim that, but the report shared exactly the same spirit promoted by RPG1. For example, projection made is based on existing current policy. And also fiscal sustainability analyzed based on 3 dimensions: revenue, projected based on current policy; service or expense or payout, actually projected based on current existing program; and also that dynamics also analyzed. And long-term horizon, because UK make this long-term fiscal sustainability analysis for whole of government. It includes central government level and also local government level, but up to 50 years. So the time horizon may vary, but they disclose of what was the time horizon used and applied in their report, disclose about those information, and also conduct sensitivity analysis. Even though this long-term projection is made based on some of assumptions disclosed in the report, what if those assumptions changed? So this graph shows the sensitivity. What if such an assumption is changed? What will happen in UK's? In this case, debt to GDP ratio, I think that is kind of deleted. So vertical axis is debt to GDP, and horizontal axis is from 2021, 2022 year, first year, until the 50 years from 2022. So in this graph, the sky blue box on the far left is EFO forecast, economic fiscal outlook forecast, done for the budgeting purpose. when UK is dealing with its own budget, it also makes a projection for the future. But that future in the budgeting context is very short-term or mid-term. 3-year, 5-year, 4-year. In this case, it was 4 years. Actually, 5 years. But long-term you're talking about is not that kind of mid-term expectation, but about 50 years onward. So in this case, baseline projection, assuming existing policy programs or the laws are staying there, what happened to UK's GDP? Debt to GDP ratio. The solid, the green line is the baseline projection. Slightly less than 100% in 2022, but they expected that debt to GDP ratio goes down as time goes by because the government were working on fiscal consolidation and try to cut down the debt. So based on that, could go decline up to around 2040, 50, but it'll goes up as we come closer to 2071. Not almost, actually above 250% of the GDP. Point is, we're not trying to scare people, but giving this information to policymakers. Okay, these are the promises we are making to citizens. If we keep this promise year over a year and a year and a year coming in the coming future, in 2070, we should be ready to deal with this much of debt accumulation. So either fix it early or be ready to pay the price in the future. So giving that information and trying to help them to make better decision now before it becomes too late. Okay, that's the baseline. What about small changes in those assumptions? So here, a couple of assumptions were actually considered as part of sensitivity test. Based on a solid green line is baseline, but the dashed green line is that baseline projection with some of historical shocks. Historical shocks means in the past, based on UK's history, there were recession, there were macroeconomic shock happens unexpectedly, but over the long run, it is reasonable to expect that kind of macroeconomic shock can occur as well. So based on projection of the current program or baseline projection, what if some of events happened in the past gonna happen over the last 50 years? Then it shows that dashed green lines actually, if it go close to 2071, goes beyond 300% of the GDP. Means when certain economic shock happens, government have to respond. Oftentimes that leads to increase in spending, accumulation more debt. How much of the consequence over the 50 years? That can be more than 50% of GDP. That much of that can be accumulated. So be ready. That's why maintaining fiscal fiscal soundness is important, because that kind of shock will happen. Whether we like it or not, it happens. So be ready. This kind of information can be provided and communicated through this long-term fiscal sustainability analysis and report. One thing UK government considered is energy price is very important. So let's assume what if there is price increase in energy. Solid blue line is persistent energy price increase, and dotted blue line is temporary increase in energy price. Both of them shows that there was upward shift of that baseline projection. But I think the UK case was kind of interesting because if we have time, let me ask you about one quick question. What do you think will happen when energy price goes up in terms of government debt accumulation? Energy price goes up. Do you think more debt or less debt? More debt, because government have to deal with additional spending to help to support citizens. But when I take a look at this blue line, dotted and solid Blue line is persistent increase in energy price. Dotted blue line is temporary, but dotted line is actually above the blue line. It's kind of counterintuitive. Energy price goes up, but it will come back soon. Then why we have more debt? But in case of UK, they have oil comes from North Sea. So when energy price goes up, there can be additional revenue coming from extraction of the oil and also other gas, energy-related taxes. So this is based on their analysis of existing their structure. Point is, when we do this kind of long-term fiscal analysis, this picture will vary based on your country's condition or natural resource endowment and fiscal structures, you name it. So try to learn from other countries' experience, but you have to customize it for your own country's situation. And also the last one is about geopolitical stress, because Ukraine war was ongoing back then. They tried to see what will be fiscal consequence of continuing that Ukraine war in UK's public finance. More than 400% GDP, that much of that can be accumulated. So that's their projection. So this is the way UK government conduct long-term fiscal analysis, fiscal sustainability analysis, and communicate it with their citizens. And Swiss government also do the same thing. Swiss government is well known for its own long-term financial sustainability report, and this is oftentimes cited as the best case of the RPG1 application. So Swiss government fiscal sustainability report, the name itself is also a fiscal sustainability report. But they do the same thing to what UK government has done. Comes up with projection and disclose their assumptions and horizon, everything is done. But on top of that, this is most recent version of a fiscal sustainability report of the Switzerland, 2024. Swiss government includes one of key long-term fiscal risk factor in their fiscal sustainability analysis. Based on the base projection of the existing policy programs, without doing anything, government, even though they stay there, but climate will be changed. And that'll have implication, long-term implication of their public finance. So based on the expected consequence of climate change and planned response to climate change, so mitigation effort and adaptation effort, Swiss government adjusted their projection for revenue and expense. So on left-hand side, this is development of receipt, so revenue side. So solid line is baseline, but if carbon tax is levied on thermal fuel, how their revenue projection going to be changed. So show the magnitude of that additional revenue or additional or loss of revenue based on promotion of electric vehicle, replacement rebate on electric vehicle, and things like that. In the same way, the expense or expenditure side also, the projection going to be changed, reflecting the implication of climate change. Building can be damaged or faster than that much of expected spending to either maintain or replace building or other aspect of work considered, and point out the magnitude of the implication for the expenditure coming 50 years. And based on this adjusted or updated projection of revenue and expenditure, Swiss government finally provide long-term analysis of their public finance. So this is another example of using this fiscal sustainability report to provide more information to the citizens and policymakers. Because we are talking about this climate change impact on long-term fiscal sustainability, please allow me to introduce a little bit of what's going on at this moment on IPSASB side. I briefly mentioned about this yesterday, but currently IPSASB is working on to promulgate the very first sustainability-related disclosure standard for climate issues. In December, first week of December, the SRS-1 will be issued. And that first sustainability report standard is very closely aligned with private sector standard. IFRS 1 S2 and SRS-1 will be very closely aligned, intentionally designed in that way to maintain interoperability of those standards. Because government oftentimes work with private sector entities, try to maintain the same kind of reporting framework. But government is unique. Government have power to levy tax, or enforce regulation, or provide subsidy to promote or limit certain types of behaviors, activities. But those kind of aspects coming from the regulator or policymakers' role of the government cannot be captured by private sector standard. So IPSASB will issue another standard after SRS-1 to cover that aspect as well. And we've been worked on this for several years. As I told you, in the first week of December, the first standard, SRS-1, will be issued, very equivalent to IFRS S2, and we're going to keep working on to come up with disclosure standard for what's called as public policy program. Why this is important? Because sustainability reporting is not only about environment, because this will make a dent in government finance in the future. When you take a look at next year's finance, probably impact from climate change may not be that severe. But because we are talking about long-term picture of the public finance, in the long run, this climate change will have a big, significant impact, without doubt. That's why, especially for long-term fiscal sustainability, we have to reflect this climate change dimensions as well. And well, this is another recap of the meaning or implication of SRS-1. As I told you, this is not only for the sustainability reporting per se, but ultimately it will be connected to the better PFM system. When a certain government is trying to come up with, let's say, green budget taking. The budget taking means some of the activities should be classified, where the information is coming from. Or when government try to provide subsidy for more greener activities. Who knows that specific entity have engaged with so much of greenhouse gas emission activities or not. So government also need the information, not only about reporting each own activity, but need to learn about what's happening on the constituent side as well. So all information should be frictionlessly communicated and should be able to be integrated. Then those information can be incorporated into overall PFM system. Strategic and planning stage, budgeting, and actual execution. No budget subsidy goes to the wrong hands, and performance monitoring as well. So entire PFM cycle can be actually more closely aligned with more sustainable government actions. That's why this disclosure should go hand in hand with finance reporting standard. And this is a snapshot of the most recent update of the RPG1, along with RPG3, to reflect this dimension of incorporating more of sustainability-related disclosure aspect. As I briefly mentioned yesterday, in this update, RPG1 and RPG3, both of them include some of more tangible example case, illustrative examples were included to show how this climate-related or sustainability-related programs can be actually disclosed. In terms of reporting of those programs, RPG3, in terms of long-term implication, of fiscal implication, RPG1. So what you can see, when you take a look at RPG1 and RPG3, those are already updated version. So you can actually take a look at those illustrative example, a later part of the report. I think that's all I have for now. So if you have any question, comment, I'm going to stick around here, so please catch me anytime. Thank you much for your attention.